For half a century, the backbone of global finance has rested on one quiet invention: the petrodollar system. Born in the early 1970s, it bound oil sales to US dollars, granting Washington unrivaled leverage over trade and money flows. But that structure is now beginning to shift. Beijing is preparing to challenge the dollar's supremacy by anchoring its currency to the world's fastest-growing resource, electricity. If this initiative succeeds, it could accelerate de-dollarization and erase one of the dollar's most enduring advantages. Here's how we arrived at this moment. America's rise as a financial powerhouse began decades ago in Saudi Arabia, when Washington guaranteed Riyadh's security in exchange for exclusive oil sales in dollars. That pact forged the petrodollar, fueling relentless global demand for U.S. currency. For generations, energy meant oil, and oil meant dollars. Today the landscape is transforming. As nations pivot from fossil fuels to renewables, one country stands out as the clear leader: China. Beijing intends to exploit its command of clean power by positioning electricity as the foundation of world trade and backing the yuan with that energy base, an electric yuan, to rival the petrodollar. Such a design could upend the mechanics of commerce, handing China the kind of structural influence the US has enjoyed since the 70s. Our task is to explore how this system might function and the geopolitical tremors it could trigger. Oil is finite, volatile, and fading into history. Electricity, however, is universal and demand is exploding, from electric vehicles to AI data centers and renewable economies. An energy-backed RMB would mirror the petrodollar but with power instead of petroleum. By expanding cross-border grids, ultra-high voltage lines, and mega-renewable projects, and requiring payments in yuan, China could push partners to hold yuan reserves, steadily globalizing its currency. Stable pricing and long-term contracts would make electricity trade predictable, cementing the yuan to the fastest-growing energy source of our age. Yet two conditions must hold: China must supply immense energy at scale, and the US must squander its energy lead. Both trends are already visible. Beijing recognized early that energy is the lever of 21st-century influence. Washington, meanwhile, has stumbled, clinging to dated assumptions instead of preparing for a new era. U.S. power demand is soaring, driven largely by AI's appetite for massive data centers. Even the $500 billion Stargate project, launched with OpenAI, faces delays because America's grid can't keep pace. Stagnant generation since 2005 contrasts sharply with China's relentless growth. Policymakers talk about beating China in AI. Yet how can they compete if the grid cannot sustain the compute itself? Fortune recently described Chinese researchers visiting the US and leaving alarmed by its fragile infrastructure, warning the contest may already be lost. America's investment model compounds the issue. Private investors expect quick returns, while grid projects require decade-long horizons. China, by contrast, directs capital toward strategic needs, accepting risk to ensure capacity is ready when demand arrives. This isn't only about AI centers. The grid also lags behind the boom in electric vehicles. EV sales topped 17 million in 2024 and could represent nearly half of all cars by 2035, yet US networks and charging sites remain built for gasoline. Drill, baby, drill, still dominates, channeling funds into costly natural gas as China races ahead in renewables. Before diving into Beijing's latest mega projects, a quick word about today's video sponsor, Defy Technologies, Nasdaq, DEFT. This innovative firm thrives at the intersection of crypto and decentralized finance, a sector poised to benefit from de-dollarization. Over the past 5 years it has outperformed Bitcoin, recently posting record earnings while trading at a modest valuation. Its flagship arm, Valor, issues exchange-traded products spanning 75-plus cryptocurrencies, managing over $800 million as of May 2025. Another division earns approximately 8% annually through staking and lending. Institutions that cannot hold tokens directly can still access them via Valor's ETPs, making the business highly profitable. Defy has also expanded in the U.S., acquiring strategic assets while remaining the largest institutional Solana manager in North America, earning an impressive 8.5% yield, about $33 million in annual revenue. For me, it's a top crypto idea, but always do your own research before investing. Let's return to how Beijing is reshaping the global energy map. This year, China unveiled two projects that redefine scale and ambition. First came the debut of the world's initial thorium-based reactor, a breakthrough that makes nuclear generation far safer and more efficient. Soon after, work began on the colossal Yarlung Sangpo Dam in Tibet. Once complete, it will not only be the largest hydro facility ever built but also the most powerful energy plant in human history, projected to produce roughly 300 billion kilowatt-hours annually. To put that in perspective, the entire United Kingdom consumed about 259 billion in 2023. One Chinese site could match that on its own. These examples highlight a larger strategy. China isn't merely fueling its domestic demand. It's exporting infrastructure as a growth engine and as a tool for Yuan internationalization. Laos, for instance, recently partnered with a Chinese firm on a $1.45 billion clean energy complex. Previously, Laos had to convert its currency into dollars and then again into yuan, losing value at every step. Now, direct settlement in renminbi allows its central bank to transfer funds straight to Beijing, keeping more capital at home and raising the yuan's profile abroad. Brazil offers another illustration. State Grid China constructed a 2,000-kilometer transmission corridor linking Amazonian hydropower to coastal cities. By exporting not just hardware but a payment system bypassing the dollar, Chinese companies merge development with financial reach. Across the global south, from Ghana's Three Gorges of West Africa, complete with a training hub for 800 local technicians, to projects in Myanmar, Angola, and Pakistan, Chinese engineers build in rugged terrain with an ease born of decades of practice, while U.S. contractors often avoid or overprice such ventures. This dominance positions Beijing to steer energy infrastructure across emerging regions and tie the yuan to electricity, the lifeblood of the 21st century. For decades, the dollar relied on oil and treasury bonds to anchor its supremacy. China's plan steadily undermines both, producing renewable power cheaper than oil and transforming electricity into a stable financial base. As this shift accelerates, America's old advantages, cheap fuel and control of reserves, are fading. The outcome is a deep realignment. Dollar influence wanes as an electricity-backed yuan rises, set to power global trade in the decades ahead. This is no distant theory, it's the next frontier in monetary rivalry, one likely to decide who holds the levers of economic power well into the future. If you've stayed with us this far, thank you. The key lesson is that the world is changing at remarkable speed, and preparing for those shifts is essential. Diversifying into new technologies and maintaining exposure to transformative sectors like crypto remains wise. That's why I highlighted Defy Technologies today, a business uniquely positioned for the era ahead. As always, we appreciate your support and look forward to seeing you in the next video.